For the first time in what feels like forever, Vancouver's real estate market is doing the unthinkable. It's tilting in favor of a buyer's market. After years where the only direction for Vancouver real estate was up, the power is finally starting to shift. In this video, I'm going to break down the 3 factors causing this massive change and what it really means for your money. And trust me, the first reason is a bit of a shocker. If you've been trying to make sense of the roller coaster that is Vancouver real estate, you are definitely not alone. For a decade, the story was brutally simple. Prices go up, period. Bidding wars, subject-free offers, and eye-watering price growth was just part of the game. But now, in the fall of 2025, the headlines are telling a totally different story. Prices are softening, homes are sitting on the market for a lot longer, and for the first time in ages, buyers are whispering the words of opportunity. This isn't just a typical seasonal slowdown, it's a fundamental change in the market's DNA, a structural change. The frantic fear of missing out has been replaced by a more cautious fear of overpaying. So what's really going on? It's not just one thing, but a perfect storm of factors that have come together to rewrite this rulebook. Factor 1 is the great flood of inventory. The first and maybe most powerful factor of this whole market turning in buyers' favors is that it's had a massive surge in the number of listings that have come on the market. And they've all come on at relatively the same time. For years, buyers felt like they were fighting for scraps. That intense scarcity created fierce competition amongst one another and sent prices into the stratosphere. That's not the reality anymore. As of this fall, the total number of homes for sale in Metro Vancouver is hovering at near record highs. In fact, as of today, it's actually over 18,000. And to give you some context, that's about a 14.4% jump above last year and a whopping 36.1% above the 10-year average. The market is flooded with choice, and we just haven't seen this in over a decade. Now, here's where it gets more interesting. While the number of homes for sale has exploded, the number of actual sales has also been really sluggish, remaining more than 20% below the 10-year seasonal averages. This growing canyon between the supply side and the demand side is the single most important fundamental you need to pay attention to right now. Analysts use a metric called the sales to active listings ratio to take a market's temperature. The best way to think of this is to picture a tug of war. When the ratio is over 20%, the sellers are winning, the bulls are winning, right? And the prices are getting pulled up. When it dips below 12%, it moves back in favor of the buyers, and then prices tend to drift down with them. Think of it this way. When you have 8 to 10 months of standing inventory that's available, that means you're going to have downward pressure on prices. And right now, we're sitting at nearly 20. As a great way to sort of understand the sales to active listings ratio is really to just get a good idea of how many months of standing inventory do we have. Typically, when you're sitting at 3 to 4 months, price pressure is pushing up. But right now, we're sitting much closer to 8 months of inventory. And the way we do that is we take the total active listings and we divide it by the total monthly sales rate. That puts us at about 7.5 to 8 months of inventory, which means you're likely going to see prices continue to soften for some time. As of September, Metro Vancouver's overall ratio is sitting at just 11.3%. So we're sitting inside of a buyer's market across every asset class. For detached homes, it's even chillier, like 8.5%. This is a clear data-backed signal that the market is now in favor of buyers, especially in the single-family market segment. Townhomes and apartments have fared a bit better. They are sitting at about 14%, comfortably inside a balanced marketplace. But buyers no longer have to make rush decisions, or emotional ones for that matter. They can breathe, see multiple properties, and actually negotiate. This flood of inventory is forcing sellers to actually compete for the sale, not the other way around. And that's a complete 180 from the entire last decade that we've seen in Vancouver. All right, section 2 here, the inevitable price correction. Now, some people have been calling for a price crash. A market crash would constitute more than, I believe it's about 20 to 22% in a single year. see prices come down. We haven't seen that. So this is definitely in correction territory, not in crash territory. Now, let's get into some of this data. The composite benchmark price for a home in Metro Vancouver has dipped to about $1.142 million. That's as of September 2025, which is a 3.2% drop from the same time last year. Now, a 3.2% drop from the same time last year isn't a market crash, much like I just mentioned, but it's the consistency of this slide that tells the real story, because we have seen that year over year over year since prices peaked in 2022. That means prices are largely down by about 15% here in Vancouver. Still, not in crash territory, in that correction mark. Detached homes have taken the biggest hit, with prices falling nearly 4.5% year over year, and condos have also dropped by a pretty remarkable 4.5% year over year. However, in some of Vancouver's pricier neighborhoods, like the west side of Vancouver as an example, condo prices have tumbled by nearly 6%. So to be clear then, prices are easing off of the unsustainable peaks that we saw back in 2022. Even with these drops, the benchmark price is still way higher than it was just a few years ago. But the downward trend is undeniable. Wages simply couldn't keep pace with property values, and buyers were stretched to their absolute financial breaking point. This price correction is also getting a push from the condo market, which is facing a bit of its own mini crisis. There are thousands of newly built condo units sitting empty, unsold across Metro Vancouver. Many of these were small investor-focused units, and with investors now running for the exits, they are just not to be found in this market, there aren't enough regular buyers to absorb the inventory that has been produced. The glut in the new construction world is creating a ripple effect into the resale world as well, putting downward pressure on the entire condo market as a whole, as desperate developers start throwing in big discounts and incentives just to get deals across the line. So while sellers are having a tough time adjusting their expectations, buyers are finally seeing prices that are a little bit more grounded in reality, opening a rare window of opportunity in what is historically a seller's market. Number 3 is perhaps one of the more interesting elements and is not something that you're just going to see in a market update or a market report. I want to talk about the psychological shift that I feel is taking place in the market here. The fear of missing out, that FOMO, was a real thing in Vancouver, and it drove the market crazy for a decade and has been totally replaced now by a new emotion, which is the fear of the unknown. And widespread economic uncertainty is the main culprit here. You talk about heightened global trade tensions, confusing new government policies, change in taxation on new property, whispers of a potential recession. It's got everybody on the edge, and nobody really knows where to look. And this isn't just a vibe, it's showing up in the numbers too. Buyers are cautious. They're taking a wait and see approach. I mean, why wouldn't they? This is one of the biggest decisions that they'll make in their lives, and they have the time now to use it. So they're going to. I mean, why would you make the biggest purchase of your life when the future feels so shaky? They see inventory piling up on one side, prices are dipping, and they're all asking the same question. Well, what if prices fall even more? That hesitation is hitting the brakes on the whole market. And it's not just buyers. Sellers are getting spooked too. Anyone still clinging to those 2022 prices is watching their property collect dust as it sits on the market for months, without even so much as a single showing. This leaves them with a tough choice: drop the price to where the market is today, or give up and take their home off the market. Either way, it creates a feedback loop, and the more sellers lower their prices, the more it confirms that the market is softening, which in turn makes buyers even more hesitant. Then there's the elephant in the room: mortgage rates. And while rates have eased a bit, with some 5-year fixed rates now available for just under 4%, they're still much higher than the rock bottom rates that fueled the boom, the COVID boom, 5 years ago. These higher borrowing costs put a mathematical ceiling on what people can afford. It's that simple. Even with prices coming down, The monthly payment is a huge hurdle that keeps a lot of buyers on the sidelines, and that continues to cool demand even further. We're waiting for that equilibrium to start to make sense. This 1-2 punch of economic anxiety, otherwise known as confidence in the marketplace, and affordability has completely changed the market's mindset, handing the power that once was to the sellers over to cautious buyers. So, what does this massive shift mean for your money or your decision making? Well, let's establish what we've got: a flood of inventory, falling prices, and a significant psychological shift. So, what does it mean? Well, if you're a buyer, this is the moment that you've really been waiting for. And I wouldn't think of it as one day you're all of a sudden going to realize, hey, I should buy a house now because prices are down enough to where I want them to be. Typically, when you come to that decision, the market starts to move and has already moved up. That's the problem with timing the market. You never know where the true bottom is. So if it's starting to make sense now, chances are you can get a good deal. Remember, it's your time in the market, not timing the market that matters here. And for the first time in a decade, you have leverage, so you should use it. You have choices. You have a lot of inventory, and you have negotiating power. The feeding frenzy is largely over, and sellers are much more willing to be flexible on pricing and conditions when they otherwise wouldn't have to be. But this isn't a license to be reckless. Trying to perfectly time the bottom is a fool's game. Instead, focus on finding real value. With so much to choose from, you can be picky and you can find a great home in a great neighborhood that you plan to stay in a little bit longer than if you had to buy in a seller's marketplace. This is an end user's market. So for those buyers who want to be here for the next 5 to 10 years, this is your time. For sellers, the game has completely changed for you. Forget listing on a Tuesday, going through 2 days of open houses and then reviewing 6 multiple offers, or 3 of them were subject free. Those days are gone. In this market, your price is everything. It's so important to price correctly. If you overprice your home, it will sit. And the longer it sits, the more buyers will assume something is wrong with your property. They won't just look at the price. They'll wonder, is something structurally not right with this thing? So you have to be brutally realistic and price your home at a sale price from day one. You also have to make sure your property shines and stands out. With over 17,000 other listings to compete with, you're going to need professional staging, professional photographs. You're going to need private, dedicated websites, social media, all different kinds of things to help promote the listing. Throwing this up on MLS is just not going to get it done in today's market. For investors, man, this is a tricky landscape for you. The chance of a quick price gain is ultimately pretty low, unless, of course, you're able to pick up a property from a distressed seller. Many properties in today's rate environment make it very difficult to get positive cash flow. So finding multiple rental suites in one home is likely what you're going to need to find in order to make this work. But I would also venture to look into the multiplex space. Maybe look at investing in real estate funds as opposed to the actual real estate itself. Getting invested with developers who are upsizing neighborhoods or who are creating density. Those are areas of interest. That is where I think investment plays a role. So there you have it. The Vancouver real estate market is shifting because of a perfect storm. A flood of inventory giving buyers real choice, a necessary price correction pulling values back from the stratosphere, and a deep psychological pivot away from FOMO into a cautious buyer. This isn't the dramatic crash that a lot of people have been calling for, at least not in Vancouver. Toronto is seeing a very different market play out. We are in a much more balanced marketplace in Vancouver. We're back in a world where the laws of supply and demand actually play a role again. Trying to navigate this market on your own can be pretty confusing. The headlines are all over the place, and it's really hard to know who to trust. Trying to figure out the distinction between market signals and market noise are 2 very important distinctions. If you're trying to figure out your next move, whether it's buying your next place, upsizing, selling, investing into real estate funds or other investments, the most important thing that you can do right now is build a clear, data-driven strategy. I offer one-on-one consultations to help you cut through this noise and locate those signals to find out whether or not this plan will work for you. And if you'd like to chat, just click on the link below to book a free, no obligation call where we can explore this together. But now I want to hear from you. I want to see what the biggest changes that you've noticed in this marketplace. What have you seen in the Vancouver market that's changed? Put your comments down below. I read every single one of them. Thanks for watching. I'll see you in the next market update.